I was at the NES Nigerian Economic Summit since Monday, and a lot was said about financial inclusion and the government strategy in that respect. But I really want to focus a bit on what we're seeing in Kenya and how we can, if you like, replicate the success we're seeing from the likes of Equity Bank in penetrating and getting financial services to the poor. My question to you is, why can't we see that kind of expansion in Nigeria today?
Good morning, Wole. Hi, nice to be back here. There are two fundamental issues. When you start to compare Kenya and Nigeria, one of the biggest challenges we have is the literacy, the financial literacy levels. In Kenya, it's as high as 80%. In Nigeria, we're still at 45%. So there's a gap in terms of knowledge, in terms of understanding, financial products within the market. So that's part of the financial inclusion strategy that the government is trying to readdress in making sure that the informal sector as well as the rural sector, as you want to call it, have access to financial products. The second issue is probably more the mindset of how we're structured in the Nigerian market. We as a country are just going into the fray of retail banking as we know it, as it should be done. So there's a lot of investment and infrastructure needed to be invested in that area and understanding of the particular segment of the market to understand how we can actually serve them going forward.
I think it's quite a few, I'll call them fairly ambitious targets were shared in terms of the growth we can see in terms of financial inclusion in Nigeria. What are your expectations? How quickly do you think we'll ramp up taking financial services to the poor in Nigeria?
I mean, a recent FINA study that, particularly the financial inclusion strategy has shown a big leap from 2010. We've grown in terms of the reduction in the formerly excluded individuals. We've gone about 6-7% from the last FINA report. So there is progress. Now, the 2020 target is ambitious, but I think I'm quietly confident that we will make some leaps and bounds in terms of getting that strategy on board.
But I think one of the concerns in success in that respect is technology, and Equity Bank's success, I think, to a large extent has been driven by technology. Your thoughts on the infrastructure we have, and of course Nigeria has challenges with infrastructure, that's been well documented. To what extent do you think this would slow down the pace of expansion into rural areas, for instance?
I think technology has a huge role to play, but it's not the only strategy. We have to have an all-inclusive strategy. There's so much technology that's talked about is really directed to mobile phones and the ease of access. Now, if you look at the stats, only 55% of the rural population have mobile phones. So what happens to the remaining 45% in terms of getting financial education and financial literacy and financial support services to them? I think whilst technology has a huge part in terms of the bending of the infrastructure, we still have to think of a multi-approach, to banking. So maybe the Isuzu model, for example, how do we bring that to a modern formal sector in terms of understanding the needs of the underbanked or the rural area. It's one of those things that is going to be tried and tested. We need to see how it will work and how it will impact the rural areas.
Okay, so clearly there are challenges, we know that, but I still get the sense that the banks are not too focused in terms of getting financial services to the poor. Your thoughts on how, maybe we should even start by dimensioning the opportunity. I know Diamond Bank is fairly focused on retail banking. So your thoughts on the opportunity out there if banks were to focus on the poor in Nigeria?
Okay, so let's look at the size of the market. There's roughly about 40 million people to be served. And when you look at the 40 million people, in terms of the rural areas, in terms of the unbanked, in terms of the access there, you have probably 80% of that are potential, customers to be moved into the bank sector. The three major barriers from a bank's point of view is obviously the unemployment, the capacity to actually save or capacity to actually own an account. You also have proximity to a bank, or proximity to transact business going forward. And then you also have the issues of KYCs. I know the CBN has tried to address that in some forth in terms of introducing voters card in Nigeria to actually address those issues. But those three areas are still ones that are posing challenges. Now, if you talk about the banks, all the banks see it as a very lucrative, interesting area to play in. But it's like everyone wants to go with their eyes open and make sure that they actually get the best area.